is what we have to focus on. We'll continue talking about the markets through the show as well. Strides Pharma is the first management that we speak to. The company reported a revenue growth of 20% led by its US business, which saw historic growth of 26% during the quarter. The UK business also outperformed, while the rest of Europe market had a muted quarter this time around. Now, Arun Kumar, who is the executive chairperson of Strides Pharma, is joining in now to discuss the road ahead for the company. Mr. Kumar, good afternoon. Thank you so much for joining in. Let's start off by asking you about what's fueling this growth in the US business, sir. Do you see this momentum sustaining in the second half as well?
Hi, Hormaz. Yeah, actually, yes. We are very confident that our H2 revenues will be sustainable. We did quite well with our US operations. It will continue doing well. So yeah, your question is right that our business could look even better in H2.
If you could give us a sense of how much better it could look, sir. I mean, what kind of revenue
we have guided
right.
for the US revenues to be between 280 to 300 million. We are trending more obviously towards the higher end of the revenue range.
But what kind of price erosion are you building in, sir, for this when you give this guidance range?
So we've been speaking consistently that we have a differentiated set of products. We have little over 250 products approved, but we commercialize only 70 odd products. Our pricing discipline is what drives the margin profile of the company. So if we get challenged, we just exit these products. So we've been consistently telling everybody that who's covering us that we have no pricing erosion in our portfolio. That's because we have not introduced the entire portfolio, and we are not building the US business for scale, but for profitability.
All right. Eventually, I remember you telling us, here on the show itself, that you are looking at around 400 million coming in from the US. So what will drive that growth? Will there be biologics, GLP-1 drugs? And also, if you could give us a sense on growth in all the other regulated markets. What's your prognosis for the next half? And more importantly, if you can give us a bit of a crystal gaze into FY26 as well.
Mangalam, the GLPs that you're referring to now goes into OneSource, the new CDMO business that we've just announced. So that's not part of our US growth story, and that's a CDMO business, obviously, as you know. Our 400 million guideline for the US, in spite of almost $60 million of business going out to OneSource from Strides, will continue to get to the 400 million run rate, 400 million exit run rate in the next 2 years, 2 to 2.5 years, as we have guided earlier, simply focusing on the portfolio that we have and introducing several of our products back into the market at the right time and the right price. So that's our current optimism. As far as the other regulated market, like I had mentioned in my earnings call yesterday, outside of UK, Australia, we did have a muted European business, but we think that'll have a better uptick next year, given that we are partnered. We partner with very major companies in these markets, and until these large players are ready to market in all the larger European markets, they don't launch the product. So our initial estimation of launch dates have slightly changed. So we will see the other reg markets uptake quite significant next year. Having said that, we will have a better H2 even in the ORM markets.
Right. Just a word on OneSource itself. If you could give us a bit of a pro forma on OneSource, what would the margin profile, the revenue profile, and the balance sheet of OneSource look like once you are transferring some of the debt into that company as well? So just basically, for those who are looking at OneSource at some point in time, what would the pro forma of that business look like?
Right. So we've actually, we're very close to getting OneSource listed in the next 3 to 4 months. As a carve-out, we've secured a lot of milestones successfully. We're waiting for the NCLT and then eventually the listing. And as you probably are already aware, we've already got an investment commitment of 800 crores at a pre-money valuation of $1.65 billion at OneSource, which goes into a combination of debt reduction and also to CapEx. So pro forma numbers should more look like in the range of about 160 to 180 million dollars, and then EBITDA margins of around 34%. We expect our exit run rate to be about $20 million and EBITDA closer to the 38-40%. And we have a very strong order book with GLP commercialization starting in Q4 and with major patents expiring in FY26. We have a very strong order book to ensure that our exit EBITDA is kind of base going forward, and we're very excited about the business. So the debt to EBITDA will be under 1 in FY26, and we expect to be net cash in the business by FY27.
You expect to be net cash by the end of FY27, if I heard that correctly, Mr. Kumar.
Yes.
So what would be the picture? So you bring down the debt over FY25-26 and then you become net cash over FY27. Is that correct?
Yeah, so being the CDMO business, the cash generation is very solid. The EBITDA to cash conversion is very high. And the OPEX leverage obviously is a very significant element for that. We expect almost, even if I say our exit run rate is 20 million, we expect growth from there. So our free cash generation the next 2 years should be little upwards of $150 million, ensuring that we will be able to not only fund our capex from internal accruals, but also being debt-free.
All right, take that point. Thank you so much for joining in and giving us an outlook into what your business looks like from a Strides perspective and a OneSource perspective as well. We wish to converse with you in the next quarter as well, and you probably give us some better guidance on or better outlook or visibility on the way ahead for the other regulated markets as well, apart from the US. Step into a short break. Come back. We have the management of Transport Corporation waiting by on the other side. Vineet Agarwal joins in to discuss what was a resilient performance in an otherwise wobbly economic situation.